Good morning, everyone. How you doing? Bega here for Serpent X Tech. Welcome back to another episode of Caffeine Crypto, where I invite you to drink your favorite caffeinated beverage, whether it's coffee, energy drink, or otherwise tea. Unless you don't like caffeinated drinks, whatever works just fine. And we go over some crypto news and what's going on in the market. Sounds like something very heavy fell. Hang on one second. All right, that was weird. The ghost of Crypto Pass has come by. Knocked over the picture frame, just ripped right out of the wall. I guess the nail that was holding it just ripped right out of the sheetrock and fell down. That often happens because the house rumbles and shakes with jet fighters going by, helicopters, whatever, because we're a naval base city. So easy fix, patch the hole, and put the picture frame back up. Anyways, yeah. Bitcoin is just stagnant. The rest of the crypto market, stagnant. Everybody's fearful, trading with emotion. Things are getting crazy. Things are getting hectic. Bitcoin can't really break past 20K. It does momentarily, but then it comes right back down. And we're still bouncing between that 18K and 20K range. So we got Bitcoin just had its worst month on record. Bitcoin just finished its worst month on the record, losing more than 38% of its value in June as of Thursday afternoon. Ether, the world's second largest cryptocurrency by market capitalization, ended the same period down 47%. The weakness in the digital asset sector is part of the broader flight from risk. Confidence in the crypto market in particular has been rocked in recent weeks as major companies face solvency crisis, right? So a number of exchanges, which we're going to talk about here in just a moment. And more to come too. So then in early June, leading firm Celsius, which promised users high yields for the digital currency deposits, paused withdrawals for its customers, citing extreme market conditions. Elsewhere, prominent crypto hedge fund Three Arrows Capital defaulted on a loan worth more than $670 million on Monday, and Thursday sources told NBC that FTX plans to buy the crypto lender BlockFi for $25 million. That's 99% below BlockFi's last private valuation, effectively wiping out the company's equity investors, according to one source. All this comes amid industry-wide layoffs as major crypto firms, including Coinbase, whose stock fell about 40% in June, marking its fourth straight negative month. There is still an aspect in crypto that we are waiting to see if another shoe will drop, if another entity will fail, if the credit cascade will continue, said Matt Hogan, Chief Investment Officer of Bitwise Assessment Management, in an interview. I think we have to get through the 4th of July weekend and get through a quiet period in the market before we can we build in the second half of the year. I kind of agree with that because there's more, guys. There's much more. All right, 5 reasons why Bitcoin had the worst quarter ever in more than a decade. The macroeconomic pressure, Terra USD, well, that's really what started it off, right? So Terra USD collapsed, depegging. Lender Celsius pauses withdrawals. They weren't the only one. Babel was another. Three Arrows Capital liquidation. And then CoinFlex. This is very interesting to me. So cryptocurrency exchange CoinFlex halted customers' withdrawals last month, citing extreme market conditions and customers' account that went to negative equity. CoinFlex claimed that the customer, whose alleges in a high-profile, basically CoinFlex is saying that Roger Ver owes them $47 million. And Roger Ver, or Bitcoin Jesus, for his angelical views in the industry in early days, denies that he owes CoinFlex money. Regardless if he owes money or borrowed money or whatever, it makes no difference. The biggest thing, the point that I want you guys to take away from all this news that I'm going to be going over is that you got these players in the space that are taking our money, right? Promise safety, right? They're not FDIC assured. I said that a number of times. They're not FDIC insured. They're not backed by anything. They say they have a cushion, right, or something in case something goes wrong to where they could get your money back. But then when S hits the fan, they don't have the capital to give it back because they've been playing games. They've been taking heavy risk with the money that we have in their accounts, kind of like the banks did in 2008. So they're not learning from the mistakes of the past. Instead, they're doing the exact same thing, causing these exchanges to fail. And there's another exchange that just failed. Cryptocurrency platform Voyager Digital, Voyager Digital temporarily suspends trading and other functions. And this news was pretty much everywhere yesterday. Thank you, Crypto Mikhail. Good morning to you guys. And good morning, first off, to everybody. I'd like to go through all the news as quickly as possible for all my future viewers and then get back to it. So hold all and any questions till later. But just good morning to David Collins. Good morning to Automatic Beats, Elliot, Jay Bohannon, Gandalf Gray, and Big Irish Crypto. I love your name. Crypto Mikkel, thank you for coming over. Joe, how you doing? Hope you find your thermal pads. And Forever Metalhead. I love that. All right. So another exchange bites the dust. Another one bites the dust, right? So Voyager, a major crypto broker, Voyager Digital, suspends all trading, deposits, and withdrawals. Digital asset broker Voyager Digital has paused its customer trading, deposits, withdrawals, and loyalty rewards, according to a statement released Friday afternoon. This was a tremendous, difficult decision, but we believe is the right one given the current market conditions, said Stefan Ulrich, CEO of lending capital Voyager. Ulrich went on to say the decision is designed to give the firm additional time to continue exploring strategic alternatives and with various interested parties, and that they will provide additional information at the appropriate time. Voyager announcement comes amid a raft of margin calls and defaults across the sector, making the digital broker the latest collateral damage of the broad market sell-off in cryptocurrency. And because of what we're seeing, this trend, right, this domino effect of big exchanges, big companies, big investors fall because they overextended themselves, right? We always preach in the crypto scene, not your keys, not your coins. Don't keep your money on exchanges, but a lot of people do that for convenience, right? Like right now, if I needed to sell some crypto, I could and easily use my Cash App, or easily use my Coinbase, or easily use my Crypto.com or my BlockFi or whatever wallet. And that's convenience. The problem for convenience is you're sacrificing security. You're sacrificing privacy. You're sacrificing you're taking a huge risk of these companies defaulting and then your funds getting locked up like those of Celsius. And we're going to see more and more as they continue to fall. So as of June 24th, Voyager said it had approximately 137 million in US dollars and owned crypto assets. The company also noted that it has access to $200 million line of credit in cash and USDC stablecoins, as well as 15,000 Bitcoin, basically 318 million. Revolving credit line from Alameda Ventures. I don't know if I said that right. Which is FTX founders Sam Bankman-Fried, quantitative trading firm. Last week, Alameda committed 500 million in financing to Voyager, and the firm has already pulled 75 million from the line of credit, but it appears that it wasn't enough to keep the business running as usual. Thus far, investors in the world's two largest cryptocurrencies by market cap seem unfazed by the news. Bitcoin is up about 2%, and Ethereum is up more than 4% towards the end of the regular market hours on Wall Street. Voyager is a competitor to crypto lending firm BlockFi, which has also been caught in the crosshairs of the sector's recent liquidity crunch. FTX has just struck a $680 million credit deal to acquire BlockFi, right? And so we're having the same thing that we saw in the financial crisis of 2008 with the banks, where we have bigger banks buying the smaller banks, or bigger banks bailing out, a competitor's bank, right? So now we got these exchanges buying out the smaller ones. And so yesterday, I don't have it on screen, but yesterday I got an email from Kraken, an exchange, an OG in the exchange, crypto exchange space, saying, earn 14% yields on your Matic or your Polygon. And that's a very enticing offer, right? But I tweeted at them and I said, I hope that you're not overextending. You're making smart decisions on what's best for your customer. And I sent them the picture of the email that they sent to me. Because we see these high yields and high interest rates that we can earn on our crypto if we just store it with whatever exchange. We want to do it, but then situations like this happen. So I hope that the OGs in the space, the exchanges that have been in the space for quite some time, have been very smart, and that we don't see them fall too. Because we definitely need exchanges in the space. Otherwise, what are we going to withdraw or cash out our cryptocurrency that we mine to? Unless we do individual sales, which is possible, right? If Crypto Mikhail wanted to pay me for my Bitcoin, I could send it to him and then receive whatever fiat currency I want. But while that was great in the olden days, in today's world, it's more convenient for people to utilize exchanges. Just don't keep your money on exchanges. It's not really hard. When you're ready to sell, send the money. When you're not ready to sell, pull it off. Put on a Harvard wallet, paper wallet, a wallet that you own the keys to, whether it's a full node or whatever. Moving on, crypto billionaire Sam Bankman-Fried also said that more exchanges will fail, and I do believe there will be more exchanges, more dominoes to fall, and there are companies that are basically too far gone. I agree. Like they overreached, they overplayed their hand. The so-called crypto winter isn't over, and a number of crypto exchanges have already run out of cash. Billionaire founder of FTX, Sam Bankman-Fried, said on Tuesday, there are some third-tier exchanges that have already secretly insolvent. The 30-year-old man, blah, 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 yada, da, 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 but still sits on 8.1 billion according to Bloomberg. Okay, cool, whatever. There are companies that are basically too far gone, and it's not practical to backstop them for reasons like a substantial hole in the balance sheet, regulatory issues, or that there's not much of business left to be saved, he said on Tuesday, without naming any specific companies. Fellow billionaire Dallas Mavericks owner Mark Cuban previously described the current crypto slide as echoing in the early 2000s dot-com bubble. And now here's where the dot-com bubble comparison does actually work. They were doing that a while back. I can see some similarities, but I wouldn't say the exact same thing. This is more akin to the bank collapse, the banking infrastructure collapse in 2008 than the dot-com bubble. It's just they're doing the dot-com bubble because it's all tech stuff, right? It's all blockchain technology, but it kind of draws similarities from both the banking and the dot-com bubble. We got big companies, big investors, venture capitalists putting all this capital into these companies, trying to get them to grow. They try to get new users to come on, and it's basically a pyramid scheme, right? The more users you get to come on, the more money you have or the more capital you have to play risky investments. You overextend yourself, you overreach. Those risky investments don't pan out. You lose a lot, and now your clients are wanting their money back, and they start withdrawing, and then you don't have the money to give back to those clients, right? It's just like the banks with the money in the safe. So we created cryptocurrency, or Satoshi Nakamoto created cryptocurrency to put power back into the hands of the people, right? But then we give it back to these exchanges that are doing the exact same thing the banks are doing, basically null and voiding what Satoshi Nakamoto was trying to do in the damn first place. So you got to be smart with your investments. You got to be smart with your crypto, even if you're just a miner. Be smart with it. Anyways, when speculative investing inflated the valuations of internet-based companies over a 5-year span before a steep crash in 2001 and 2002, crypto is going through the lull that early internet went through, Cuban said. The space is currently stuck in a imitation phase where there are too many companies with too little new utility. Like Bankman-Fried, he predicted that there will be more companies that fail. The chains that copy what everyone else has will fail. And that's basically what it's been a lot lately. It's been a bunch of copy paste, copy paste, copy paste. New exchange pops up. We do this, we do this, we do this. We offer this, this, this. We get, API on this. And this is why you get, in order to pay you that high interest on your cryptocurrency, they have to take on heavy risk. So it's not free. Yeah, you may be getting those payments, and they are pretty good interest rates and pretty good payments on XYZ crypto. But now here we are paying the risk. And honestly, like I told my wife, we have $500 locked up in this right now. But it's not money I'm not willing to lose, right? Don't bet more than you're willing to lose. Most of the cryptocurrency is on a hardware, paper, or wallet that I own the private keys to. I will say that some of the exchanges that I'm concerned about, I have pulled funds off. but I'm sure many of you have. The only reason why I kept money on there is because I wanted to do quick transactions. Like, for example, when I went on the trip to go see BBT, I wanted to have some funds easily, accessible that I could exchange for fiat, use the card right then and there, pay for gas, trip, whatever it may be. So with all these exchanges, with all these idiots, no disrespect, I bet you they're very smart investors and very smart individuals in the space. Oh, hey, Nicholas Vega is the article writer. Cool. Good to see another person with the last name Vega. But we Celsius, Babel, Three Arrows, now Voyager. We're just seeing more and more hit the dust. And of course, that's going to cause regulation, right? So now we got the EU agrees on landmark regulation to clean up the crypto's Wild West. And we do need this, right? We do need this, right? With what happened with Terra, the USDT, Terra Luna itself, what is literally going on right now needs to be regulated in some form or fashion. These guys that are inviting users to dump a bunch of money into their platform and not having any type of regulation or oversight, or having the capital, if case something goes wrong, to then give back to the public that provided that money, it's stupid. You should always have at least double of what it's like construction. What is it? The cost of materials, right? You calculate the cost of materials and everything, and I think it's you add 10 to 15%. Now, some of that might be waste. If you can recycle it in some form or another, maybe use it on a different job site, great. But you always have more than what you need. Not exactly what you need, but well more than what you need. Let's say that $80 million worth of capital has come in from various consumers like yourself into an exchange called Vega Exchange. I would prefer to have double of what the consumers have provided to me. If you give me 80 million in various accounts that you own, I'm going to have double just in case something goes wrong, 160 million. So that way, in case something goes wrong and then you want your money back, I should be able to give that right back to you. Now, the EU officials on Thursday secured an agreement on what is likely to be the first major regulatory framework for the cryptocurrency industry. This is kind of going to set the precedence for the rest. I know the U.S. is working on something, but will that law pass? Not so likely. So we're going to see how things ripple. Now, the U.S. does need to get ahead of the thing, because if the EU starts putting in regulation and then we copy paste again instead of optimizing it or making it our own, then we're going to have problems. But we do need regulation throughout the world for cryptocurrency in some form or another. But the problem is I'm concerned about them regulating it into the ground, which is why we have users in the political atmosphere working to educate, working to teach, working to provide insight to this political, both sides of the political aisle, to make sure that we're not regulating into the ground. We're doing a good job of regulating the overall market. But the European Commission, EU lawmakers, and member states hammered out a deal in Brussels after hours negotiations. The move came a day after the three main institutions finalized major measures aimed at stamping out money laundering. And that's really why they're doing it. They're not doing it because of the impact on the consumers. See, that is a part of it. But they're mostly worried about money laundering or people using it for nefarious purposes. Primarily the war, right? Russia being able to sustain itself because they're using cryptocurrency, which to me is stupid. It's not stupid, but that shouldn't be the main reason why you want to create all this regulation. The new rules come at a brutal time for digital assets when Bitcoin is facing the worst quarter in more than a decade. The landmark law, known as Markets in Crypto Assets, or MICA, is designed to make life tougher for numerous players in the crypto market, including exchanges and issuers of so-called stablecoins, tokens that are meant to be pegged to the existing assets like the US dollar. Under the new rules, stablecoins like Ether and Circle's USDC will be required to maintain ample reserves to meet the redemption request in an event of mass withdrawals. That's what I was talking about, right? Being able to repay back the original people that put the money in. Stablecoins that became too large also face being limited to 200 million euros in transactions per day. And that's a little bit steep. 200 million euros in transactions per day. Let's go look at a stablecoin real quick. So the past 24 hours, what is that? That's market cap. So past 24 hours, we did 143 million, 4 billion. In the past 24 hours, we did 4 billion in USDC. And they want to limit it to 200 million euros in transactions per day. That's crazy. Now, that would kind of, like, during a run, right, during a major pullback and everybody freaking out and swapping to stable coins to kind of lock in their profits as the market continues to drop, that would kind of slow the bleed down. But I can see that also being a limiting factor. So the European Securities and Market Authority, or ESMA, ASMA, I don't know, will be given the powers to step in to ban and or restrict crypto platforms if they are seen not to properly protect investors or threaten market integrity or financial stability. Today we put order in the wild west of crypto assets and set clear rules for harmonized market that will provide legal certainty for crypto asset issuers, guarantee equal rights for service providers, and ensure high standards for consumer investors, says Stefan Berger, the lawmaker who led the negotiations on behalf of the European Parliament. MICA, or MICA, will also address environmental concerns surrounding crypto, with firms forced to disclose the energy consumption as well as the impact of digital assets on the environment. A previous proposal would have scrapped crypto mining, the energy-intensive process. Whatever, shut up. Anyways, that previous proposal got shut down by lawmakers in March. Mining is still around, baby. The EU Commission has been tasked with determining whether NFTs require their own regime within 18 months. Separately, regulators also agreed on measures Wednesday that would reduce the anonymity when it comes to certain crypto transactions. Authorities are deeply concerned about exploitative crypto assets for laundering, ill-gotten gains, and invasion of sanctions, like what's going on in Russia. Transfers between exchanges, so-called unhosted wallets owned by individuals, will need to be reported if the amount tops the 1,000 euro threshold, a contentious issue for crypto enthusiasts who often trade digital currencies for privacy reasons. So one, they're trying to reduce privacy, not good. And two, they're trying to limit the amount of transactions that can happen, not only for stable coins, but for the average investor, or not limit it, but you're going to have to report it. And we're talking a lot. Now, I believe at the early stage of the taxation on crypto, if it was over $10,000 in a year, you needed to report it. Now they want you to report every single cent. And that's going to be true for every country, no matter where you are, no matter if you're taking it off of an exchange to a wallet and you're sending it to yourself. You want to notate every transaction, which is what makes it hard, especially when it comes to mining rewards. Max Voltage got a really good video on that. He's not a tax professional, not a CPA, but he does provide some pretty good information. So anyways, reducing fragmentation. I know I might be losing you and boring you, but hang in there. This EU regulation is important. So overall, MiCA is the first attempt at creating comprehensive regulation for digital assets in the EU. While some of its stricter policies have rattled a few crypto firms, several industry insiders see the move as a positive step and believe Europe will lead the way in crypto regulation. The rules are expected to come into force in early 2024, a landmark move that would put the bloc ahead of both the US and Britain and rolling out laws tailored to crypto market. Harmonizing the market is key in order to really generate bigger crypto companies in Europe, says Patrick Hansen, an advisor to the venture fund Presight Capital. Europe is lacking in huge crypto companies right now, and fragmentation is one of the reasons why. Coinbase is seeking licenses with the EU, and they should be able to provide services for all 27 EU countries under MiCA. So it's got some positives and some negatives. Again, having colleagues in the political space to help educate and provide insight to political figures, it would be a huge benefit. I know there's already people working behind the scenes and in front of the scenes to try to get everything squared away, make sure everything is good, and that they don't regulate into the ground, which is why the ban on crypto mining failed in March. Moving on, we have Ethereum. We all know about Ethereum, right? Ethereum Thursday had an update. All right, we're pushing back the difficulty bomb to mid-October. That does not mean the merge of Ethereum is delayed in any shape or form. It's just giving us more time to mine said cryptocurrency. Block times have diminished. Matter of fact, if we go over to Transaction Street It does. I do have the block times on here. If we let it rotate for us real quick, we should see it in just a moment. So the medium transfer fee is around 81 cents. Of course, there's a bunch of transactions pending, and the average block time is 14 seconds, down from 16 or thereabouts. So it is a lot better, and I already did a video yesterday during a live stream talking about my overall profits, or what I'm earning per day has gone up decently. Now, one rig is down, but you can see I'm earning what to mine says, but compared to what it used to be, right? Compared to what it used to be, 0.25. Yeah, that's basically where I was at. So I'm gonna do some math for you real quick. So this is what I was making per day with my rigs, not your rigs, my rigs, right? So 0.017. We divide that by 0.024 is what I calculated, and that's about 30%. I got a 30% increase in profits mining Ethereum. I mentioned that yesterday. I know a lot of people are cautioned or concerned that everybody's going to come back to mining Ethereum, and then profit's going to go down because, you know, difficulty goes up, yada yada. But we can see that the difficulty has stabilized since then, right? Since Thursday, June 30th, we saw a huge, not a huge, but we saw the drop in difficulty. Obviously, things will worsen over time. We also saw the hash rate kind of dip, but not really. Let's see here. Let's go a week. Let's go month. It's been on decline for a while, so it's not something that significant, right? So 30th happens. We dipped down. We were previously at 923 terahash. Now we're at 800 terahash, and then we're leveling off. Let's say the middle of the road would be about 860, 870 terahash, which is where we're at right now. And so profits are up, and so you can stack that GUI and try to make some more Ethereum while you can before the merge. And very interesting to see how things shape up. Obviously, what is it? Great Glacier hard fork is what delayed the difficulty bomb, and we're seeing reduced block times, increased profits. For how long? Obviously, as things continue on, we will see the difficulty continue to go back up, and the difficulty bomb will kick off, but it delays it back roughly 700,000 blocks or 100 days. I will get to your question in just a moment. I see some of you tagging me. Hang on. The crypto collapse shows the Fed's job is almost complete, says Jim Cramer. Crazy guy, but whatever. CNBC Jim Cramer on Thursday said that the rapid slide in cryptocurrency market shows that the Federal Reserve is making progress in the struggle to tamp down on inflation. There is one front in the war on inflation, and that's been outstanding total victory for the Fed, and that is the battle against financial speculation. With the emulation of crypto, the Fed's job is almost complete, but they don't seem to know it yet. They're just gearing up to throw people out of work to make it clear that inflation is a thing of the past. The Mad Money host comments after Bitcoin finished the quarter at record lows. Major companies in the market face solvency crisis. Layoffs are an exodus of investors selling off holdings. While some Bitcoin supporters expect the market to recover, others are skeptical. I know miserable stock owners love company, but this crypto decline is the mother of all miseries, and I think it's a fitting coda to a horrendous quarter, said Cramer. He added that despite the Fed making progress in bringing down financial speculation, it still needs to control wage inflation and get the unemployment rate up in order to truly win the battle against inflation. The stock market now reflects a lot of bad news, but the Fed's still dismantling the good, and they'll keep doing it until the unemployment rate starts to surge, which I suspect will happen after one large, maybe 100 basis point rate hike. And unemployment is down quite significantly, and it's kind of cresting right now, or it's kind of like, bottoming and kind of curving back up. So we'll see how things shape up in the long run. Coinbase has always been partnered with their governments, our local governments. Well, now Coinbase crypto exchange selling transactional tracing data to U.S. Immigrations and Customs Enforcement to report. Obviously, I'm not going to read all this to you. Everything I talked about and all the articles that I talked about is in the description. But I'm just going to assume it's more for, maybe like tracking Russian oligarch who sends millions of dollars to their family in Russia, who's in support of Putin, who's got sanctions on him. I don't know, but it's Homeland Security, it's ICE, and they're selling that data to people, right? So if you're not doing anything nefarious, you wouldn't really worry about. But that is a huge issue with privacy, which is why privacy coins come into to effect. But I have a concern that the regulators are going to regulate privacy coins out. Like, you won't be able to use them on XYZ exchange because they want to know everything about when you're doing it, who you're doing it with, why you're doing it, how much you sent them, when you sent them, what hand you wiped your butt with. Like, it's stupid how much information they need to know about our lives. They want too much control, and they need to, like, just pull back, man. Like, why can't everybody be middle class again? Like, the middle class isn't even middle class. Relax. Let them have some money. Right now is not a good time. Anyways, it is a good time, however, for hardware. As crypto crash leads to fire sale of hardware, of course, we got a lot of people in China selling their hardware for relatively cheap, actually. We've seen 3060 Ti's for going for 300, 330, 3070, same boat, 3080s in the sub $500 range, 550. So I did a video already on what I think is going to happen, and I'm going to go check out some questions because it's already 10:30 here, or excuse me, 11:30. But let's go. What was the video I did? I just did it a second ago. Hang on. Wait a little longer. Don't buy GPUs right now. Right? So I did this video, and basically, I'm saying wait, but there was a question at the beginning of the stream that Dave Collins can finally get a 3070 at Best Buy for MSRP, and I can't get myself to pull the trigger. If you are waiting to complete a system, go for it. But if you're not waiting to complete a system, you could wait a little bit, but I don't want you to wait too long, because a user made a good point. Let's actually go through this right here. Review for the tube. Let's talk about you, buddy. So I had a conversation with this individual. They say buy if you want to, LOL. Who knows what will happen with the market soon? Every time I've taken advice about waiting, well, boom, there goes the deal, goes away, and then the next gen drop is higher than expected. Then it sells out, and people underestimate the market. Because as shown just the other day, mining only covered $15 billion, so 10% of the global GPU market, meaning those will be filled by all. Basically, he's saying don't wait. I'm saying wait, but then he brings good points. If you wait too long and then the market takes off, then GPU or hardware pricing goes up, and then you waited too long, and then now you got to pay exorbitant prices. What I'm saying wait on is because I believe the 4000 series from NVIDIA and the 7000 series from AMD is going to continue to push the second-hand market GPUs is what I'm mostly referring to, down further. If we go to newegg.com, obviously there are still GPU pricing that's up there, but the second-hand market is looking really right. If we sort by lowest first, the lowest 3060 Ti. Well, that's not what I wanted. Where's the 3060? So that's 3060 open box. I want 3060 Ti. Where's the Ti at? I said 3060 Ti, dang you. Alright, anyways. Alright, let's go back to Newegg. Components, video cards, desktop graphics. We're going to choose the actual card we want, which is a 3060 Ti. We're going to apply it. We're going to sort by lowest. And survey says $499. So compared to the $700-800 for LHR models, which most of these are all LHR, which again don't matter unless you accidentally update to the wrong driver, or the $1,200, $1,300, $1,400 that we were paying for full hash rate cards, this is much better, and they're in stock. Like, for once, they're in stock. But I'm saying, like right now, we're at MSRP of some of the cards, right? We're back to MSRP when they originally launched. However, I suspect that they're going to drop below MSRP as the 4000 series comes out, as the 7000 series comes out. But if you wait too long, yes, you could miss an opportunity. So just be smart. Obviously, if you got to pay your rent, feed your family, feed your baby, take care of that. Don't go spending thousands of dollars on hardware just yet. Take care of your priorities first, unless you got the money to blow and you have at least a nice little blanket, because I suspect there's still going to be some more downturn. And this is not financial advice. I'm talking about in general. There's still going to be financial pain throughout all markets, not crypto, but stocks and everything. If you don't have cash as a cushion, or some type of other investment as a cushion, if you're not positioning yourself well and something goes wrong, or you have an accident or something to where you can't cover it, then don't be spending money on hardware to mine cryptocurrency. That's just my opinion. All right, so Gandalf actually asked another question, my opinion. In your opinion, what's the best hardware wallet that actually stores coins on a device? So we know Ledger was compromised. That's not new. But my favorite hardware wallet is the Ledger. Now, this is the newer one. I did a video on it. But I also have the Nano S, and then I have a couple of other ones as well. But Ledger, Trezor, there's another new hardware wallet that I think Red Panda or somebody did a while ago. Crypto hardware wallets. Let's go see what other options are there. I think this was it. Is that it? Arculus? No. What's the hardware wallet that Red Panda did? Trezor's good. Ledger's good. Paper wallets are good. The only problem with those is obviously you can accidentally lose the wallet, so to speak. Engrave. Bitbox. This one, Keep Key. And that Keep Key, I think you can, it's, yeah, Shapeshift. And I like the CEO of Shapeshift, sort of. I don't agree with everything they do, but I like that. Yeah, Keep Key is one of them. But there's all kinds of different. My favorite one, though, is definitely the Ledger wallet. Voyager stopped withdrawals yesterday, I believe. Yes, they did. All right, cool beans. Good morning, everybody. Just going through the chat here. Bear with me. Hugo, HOM. Binance gives 10% yield on BUSD. What do you think? Oh, man. Binance. Oh, Binance. I don't know, man. I don't know. I know I can't go to the US, or I can't go here because I gotta go to the US one. Whatever. I don't care. I don't want to go to Binance US. I mean, Binance is a good exchange. It's just they're not available in the way that I would like them to be available to us here in the United States. But I mean, that's not as bad as other crypto exchanges that are offering, what, 20%, 18%, 14, 15%. Like, whenever you see those high yield interest emails or like programs that are telling you can earn this much if you store your crypto with us, that's great and all, but you don't own the rights to that crypto asset anymore. Yeah, you might earn, XYZ, but you're taking a very serious risk. And I don't think that risk right now, in this current market conditions, is not worth it. The payoff or the amount of crypto that you would earn by holding that cryptocurrency on said exchange is not enough to outweigh the risk in case that exchange goes down, especially right now. Because what happens is everybody's lending from each other. It's like a big game of telephone, right? When you play a game of telephone and you whisper something like, Crypto Mikkel, help me get A2000s. By the time it gets around the table, it's going to be like, Red Panda Mining told Crypto Mikkel, who told DJ Mines, who told Serpent about A2000s. Like, it's so completely different. And I know that's a poor analogy, but what I'm trying to say is everybody in this exchange circle of retail, of like, not retail investors, but exchanges are all shaking hands with each other. They're all lending to each other. They're all going to conferences together. They're all partying together. They're doing stuff and making shitty deals in the background outside of our purview. And so if one falls, it starts to impact the other, right? And then they're like, oh, no, we're fine. We're okay. We got this. No, we're not going to close our doors. And then something happens behind the scenes that we don't get to see again, and then they fall. And then it just continues on and on and on. So just get your money off of exchanges. And I'm not trying to cause like a run on banks, which is basically, again, what's happening, right? You saw on Twitter, especially with Celsius, you saw on Twitter, oh, I'm taking my money out. Oh, I'm taking my money out. I'm taking my money out. I'm done. I'm getting out. And it was just withdrawals, just stampeding on these exchanges. The exchanges didn't have liquidity, and they had to pause it and stop it. Now nobody can get their funds. And that's, again, because they themselves have taken on risk they can't afford to cash out. So that's their own dumbass fault. Oops, I cursed. I'm not supposed to curse. All right, moving on. We're probably going to wrap up the stream here early, guys. All right, how can they control that? Let's see here. I don't know what I was talking about at the time. Rud puts, how can they control that? Red Fox also has a good way to keep track too. How can they control that? Okay, we're talking about the EU locking down how much USDC. Well, the exchange is going to have to comply. If the exchange wants to be open and work within whatever country, they have to apply or work under the guidelines or regulations that they set forth. So they would have to limit. I'm sure like there would be some days where it goes over like 2 million, right? But 4 billion would not be something unless they have multiple USD or stable coins. That's the only other way I can think of it, right? You have multiple stable coins. Stable coins that became too large also face being limited to 200 million euros in transactions per day. That opens the door for other stable coins to get into the market. The problem is what are those stable coins going to be pegged to? They lose their peg. That's going to be a huge thing, just like Terra, all that good stuff. So they are going to have other stable coins that are like, I don't like stable coins, but the main ones are USDT, USDC, BUSD, are pretty much DAI is the pretty much the main ones. When USDT, Terra, USD was around, that was a big one. But of course, when it crashed, it took the rest of us with it, right? It's just like the Titanic. When that thing went underwater, everybody that was in the water near it got sucked down with it. All right, so Elliot, do we have any idea of a merge date? So Elliot, my prediction, if we look at the calendar, since they pushed it back to October, it's still looking like August, September for me. So I would say more September than August, but I'm gonna go ahead and predict the second or third week of September. But I don't know. I don't have a crystal ball. I can't give you an exact date. I just know that there's still a lot of work to be done. Hence the reason why they delayed the bomb, because block times were getting too high. If the block times continue to get higher, 20 seconds or above, that will cause congestion issues with transactions, hurting the overall ecosystem of Ethereum, dropping down the price even further compared to the other cryptocurrencies. So they needed to delay it, but I'm looking second or third week of September. We'll know more as we got another meeting coming up here soon, shortly actually. I'm pretty sure. I got a notification about it. Ethereum. Yeah, so the 14th, that's Thursday, July. We'll see what happens. Dave Collins, extra mining card. I just can't justify the price versus ROI right now. I completely agree. But so you were just going to get it for extra mining card. Yeah, just wait right now. Just wait. Just give it, if you got cards, they're mining away, they're stacking away, stacking sats, whatever. Just chill, guys. Now, there's an offer or a deal that you can't pass up. Like, you can get a 3060 Ti for 200. Maybe that might be something you want to pull the trigger. But that's if you got the money to do so. Black Cat Crypto. But isn't the 4000 series getting delayed? Yes, 4000 series or the 40 series from NVIDIA is getting delayed. Let's go check out video cards. But I still think, we don't need anything else right now. We're actually in a good spot. Right, the crypto market's down. Yeah, it's not as profitable. Most of us got a number of rigs, good to go, running, hashing away. Just stack those sats, keep your head down, pay your bills, do right by your family, do right by your company, whatever you work for, and just keep grinding. Like, it's no reason to go all ham. There will be better deals to come in the future. Maybe not right this second, but I do suspect as we lead into the merge, actually, the merge is going to tie into the pricing of hardware, believe it or not. That's my speculation. Again, I'm just some guy on the internet, not financial advice or anything like that. But even with the 4000 series being delayed, and primarily supply, right? Even if the 4000 series did launch, there's delay in manufacturing, the process, because NVIDIA is using TSMC's process to produce these wafers and GPUs that because they had earlier a drought shortage that I think is like they're able to continue operating, but I think it was pretty bad. They're still working on opening a fab here. They're still being impacted. All of us are still being impacted by the pandemic and the supply issues. So it will take some time. GPU pricing, believe it or not, is a lagging indicator of the crypto market. When the crypto market continues in its current stagnation of up and down between 18 and 20K, I believe GPU pricing will continue to fall even further. What do you think is the best exchange to buy a substantial amount of BTC? Concern is that I will buy and not be able to withdraw before something happens and my funds are lost. OTC, over the counter, is pretty good. If you can find a Bitcoin ATM near you, go and grab some Bitcoin. Obviously, they can only do so much there. But as far as an exchange, you want to go to, like, if you're here in the States or US, if you got a Coinbase account, go ahead and buy and then withdraw. Like, as soon as those funds are available, withdraw. If anything, as dominoes fall, I could see Binance, Kraken, and Coinbase being one of the last exchanges, FTX US being one of the last exchanges to be impacted, and they will continue to go forward. But it's these smaller exchanges that over leveraged and promise the world that it's going to be the ones to fall. I think Coinbase has the capital to protect itself. FTX US has the capital to protect itself. Kraken hopefully has the capital to protect itself, but we'll have to see. And yeah, did you watch the Hobbyist Miner interview with Ergo? If so, what are your thoughts? I have not yet, but people have told me to, and I'm sorry I have not. I haven't been able to keep up with every one of my brothers out there. I mean, the ecosystem has grown so much, but I had definitely heard good things about it. Let's see here. This one right here. What is the future of GPU mining after Ethereum? With Joseph. Did you watch the Hobbyist Miner interview with Ergo? If so, what are your thoughts? Well, looking at the title, Future After Ethereum, I think there is still one. The bad news is, if we look at cryptocurrencies, I just want to show you this real quick. Look at this top number. This top number says 20,088 cryptocurrencies. That's how many cryptocurrencies are in the market right now. That's absolutely nuts. Now, here's the thing. I'm zoom out. And what I'm going to do is I'm going to filter by mineable or proof of work cryptocurrencies. So out of 20,000, let's see here. Out of 20,000, CoinMarketCap's only saying there's 172 cryptocurrencies that are mineable, that are actually mineable. There are some cryptocurrencies that aren't on CoinMarketCap that are mineable, but I'm just saying that's quite a small amount. So most of the world, as we continue in the future, most of the world is going to continue to establish or build cryptocurrencies on non-proof of work foundation, which sucks. So with less coins coming out in the future, we're just going to be stuck with a certain amount. And we need those projects to innovate, to come up with new things, to work on uh, um, coming out with a new invention, a new protocol, a new layer, a new something that draws attention and puts it back into the hands of the miners. I can tell you one thing: Bitcoin ain't going nowhere, and Bitcoin is the number one coin. Bitcoin will always have to be mined, right? There's no changing that, and mining will always have a place. It's just, what is it going to change to? Will there be a GPU in the future that can mine Bitcoin? Basically an FPGA GPU hybrid, something like that. Probably not, which is why you need ASICs and why we continue to have ASICs. But as technology grows, right, what would the future hold, 20 years from now? Because Bitcoin is going to keep happening. The price is, going to continue to go up because, again, it's a high demand, low supply situation. Yeah, right now it's down, but we're talking long term, 2040, 2050, and beyond. Bitcoin is going to have to continue to be mined. ASIC manufacturers going to have to continue to come out with better and better chips and boards to mine, and we're going to see 400 terahash, 500 terahash. What is the top ASIC right now? Let's go look real quick. So top SHA ASIC right now, at least according to this chart, is the Bitmain Antminer S19XP. And that only does 140 terahash. And that's what I'm talking about. So like 400 terahash, 500 terahash. And then imagine years from now, we get a GPU FPGA hybrid type card that can do maybe 40 terahash or something like that. That would be crazy. But again, that's just craziness. Me talking. Don't take that at face value. Just saying that there will always be coins to mine. Yes, out of 20,000, only 172 exist. As products continue to build new things on like proof of stake and alternative options because they want to be green or not use energy to mine. But proof of work definitely still has a place in crypto. Mining still has a place in crypto, especially in the future of crypto. If it wasn't for mining and miners like myself and Bitsby Trippin and Ceph and many others that were participating back in the day when it still wasn't profitable, or if it was profitable, it wasn't as profitable as it is today, securing the network, validating transactions, then it wouldn't really have taken off. We wouldn't be where we are today. So definitely need to pay homage to some of the people that came even before myself, because I wasn't there at the beginning like BBT was. So definitely pay my respects, understand where we came from, and then work on how we can make the future better. But that's going to be it for today's show. I thank you so much for hanging out. Please do me a favor on the way out, hit the like button, make sure to get subscribed, hit the notification bell to stay up to date, as well as check out links down in the description. Actually, I just wore a new shirt yesterday from the dogelord.com website, where you got the Serpent X collection. I got a polo shirt with the Serpent X logo. Really cool, business appropriate, looks good. I'm gonna try to rock that at like different conventions and business meetings and stuff like that. But if you're interested in getting one, feel free to go to dogelord.com. Link is in the description. Otherwise, any of the links down below help support the channel. They are affiliate links, so they provide a kickback. And I'm just gonna continue grinding, even though the views are down, crypto's down, money's down. What used to be a couple $1,000s a year, earlier 2021 or during the highs, is now only like what, $200-300. So it sucks, but just this is not the first one, and this won't be the last one, guys. Just hang in there, it'll be okay, and I'll catch you guys later on. All right, take care, be safe. Happy 4th of July. Go out there, go play some football, go play some soccer, grill some hamburgers, grill some hot dogs, spend time with your wife, your girlfriend, your kids, your partner, whatever it may be, and just take care of yourself. Be safe, guys. I'll see you later.